exponentially grown during this time. Then we have Sapan from Easy Rewards joining us a little later, around 4:20, 4:30-ish. And Kumar Kashyap from Supply Note is joining us around 4:40. So all three different entrepreneurs, different sectors and spheres are going to be talking about their experiences and giving us an interesting insight of what they have been doing. And of course, like always, this is all help to each and every one. Please do post your questions on the side note in the thing, in the chat box. And let's kick off. So Dr. Apoorva, your opening comments and thoughts on the current situation. What have you been doing? What have you been advising people? Has it been good for you? Has it been bad? Startups panicking?
First of all, Naveen, thank you very much for introduction. We are just a help to startup. We are trying to expand our services and enablement as much as we can. And so whatever we are today, it is primarily because of the startups which we have invested in and their performance. So for us, the startup is our world. So this current situation of COVID, a lot of people interviewed me, Dr. Apoorva, what is your strategy? What are you going to do after COVID? So my answer to them was very simple. This pandemic situation, actually, there are times when people test you, right? The times when, the testing happens for the startup founders. And so the startup founders who are able to, recreate themselves, or I will say, are able to stand with this tough situation, they become very, very big. So during this COVID-19, frankly, last year when we were declared world number 7, we were declared because we did around 60 odd investments in startups last year. And our investment size was also very, very big. We would have syndicated around 500 crores in my portfolios. But, this year also, if you see, we are closing 15 investment by April. We are hardly impacted, largely because our investors are SME owners. These are people who have built strong, solid businesses in different cities. And we hardly have, investors who are, big investors in stock, hardly 10%. So our base of investor is huge. And that's the reason why we are closing 15 investments in April end. So, and we've gone, we've not at all changed our strategy. We are not at all going to change our strategy. Rather, we'll be more aggressive next 9 months, because we know that this is a time we can grow up in the ladder as far as the investing in a startup is concerned. And we are now getting deals from across the globe. That is another beautiful thing happening now. We're getting deals from Stanford's, we're getting deals from Harvard's, we're getting deals from, and especially because after TechCrunch, this announcements, this is happening. So we've gone, frankly, doubly aggressive, because this is a time when we are, that every recession, there are potential unicorns born. And this is a time if you are not, your eyes and ears are not open, you will miss a very good opportunity. So as far as the venture catalyst is concerned, we are expanding in 75 new cities this year. And that expansion is very much on track. That is our horizontal expansion. We are signing up around 20 cities by April end. And all these cities, we are setting angel network and the incubators. Then as far as the vertical expansion, because we wanted to increase the offering to our startups, 3 things we did. We taken a very large stake, in the Incubate Hub, which is largest open innovation company for startups. So this is helping our portfolio companies in a big manner, getting them business. Earlier, there was only 90 investments, but I know over time, my portfolio numbers will grow up to 500. And all these startups need business, and there is no structured way otherwise to get business from corporates. So that was the reason why we did a strategic investment in Incubate Hub. And that company has started helping our portfolio in a big manner. Every month they are showcasing four of our portfolio companies to the corporates. And today, secondly, we also launched the CXO Angels, which is sector specific. In every sector, we realize there are about 300 to 500 CXOs. They are not only looking deals to invest, but they're also looking to, and this is our global product, which is led by two gentlemen from our network. And we launched this in GCC, we launched in London, we launched it in India in 6 cities. And there are about 600 plus CXOs. They've become part of this network. And they're helping our startups not only, getting there is something happening in Mumbai, 18th of April, virtually, of course. Everything has gone to virtual now. So they're helping our startups to understand what is required for a corporates to give them business, and also individual capacity they're investing. So that is one vertical expansion. Third vertical expansion, what we did is the setting up a founders network, which is also again a global product. All of you know there are about 400 plus unicorn in the world, and there are about 3,000 plus semi-unicorn in the world. So some of our portfolio company, Vikas, is there on the call. Sapan is on the calls. So our portfolios are basically reaching out to unicorn founders, and they're bringing them to a network. So that we're launching on 18th of April, actually. So that's going to help us, our startup, getting better connects through peer-to-peer learning also from some of their peers. So these are 3 things which we have done. And as far as the investments are concerned, we have done 15 by now. And hopefully we will cross 60 investment this year again. Earlier we were thinking to do maybe 100 this year, but even if we'll be happy if we cross 60, I think. And we are now focusing more through our 9 Unicorn, which is our fund, accelerator fund, which is now into the play, to develop startups in a much more structured manner. And all of you know, we are primarily a startup development company. We are primarily an incubator, accelerator, and angel network company. And we continue to be the same. We working with a lot of VC funds internationally, a lot of family office internationally, a lot of corporates now in India and internationally to develop these startups and take it to the next level. That's what from our end, Navi.
So thanks, Dr. Apoorva. Just a quick question. That was a great intro about VCATs and what you're doing. What have you seen ever since COVID-19 has started? Has anything different changed with startups approaching you now?
Yeah, so the difference is the consumer startups. See, I think the education, gaming, B2B startups, tech product startups, they are less impacted. But you have to understand this 3 months till May end, you have to write it off from your startup. Startup life cycle is just 24 months, frankly. If you see most of these large startups, those who become unicorn, they become unicorn in 3-4 years time. My past experience with Oyo was 4 years, you become a unicorn. So, if they become a unicorn, even now Bharat Pay is on the same track. So their life is, and this is quite visible in 24 months that if they're becoming a unicorn or not, or they're becoming what level they're going to reach. Out of that, the first 1 year, 12 months is very, very important. And you have to understand that these 3 months where, they cannot demonstrate their capability of increasing the revenue, right? So that has to be signed off from, for every startup. It is a good justification, rather, I'll say. Right now, they should focus on building the product, building the right team, building the revenue strategy, And don't worry about the revenues at all. Controlling the burns a little bit. I will never say, because my portfolio, I always tell them to raise more capital than what is required from day one. So, but the other startups, because there are so many other startups on the call, I will say that, this is a time, gentlemen, then, ladies and gentlemen, when, if you see out of 50,000 startups in India, there are only 36 unicorns, only 36. And there are only 282 semi-unicorn, right? What happened to the rest of them? So this is the time when you can take your chances, because there is no pressure of building the revenues. So this is the time when you can bet fully on raising the large capital and go to the markets, international markets globally. And I'm talking about the virtually. You can go to the, I'm sure you know that in China, there are about 25,000 VCs. They are looking India very, very eagerly. Go to the markets where you have a mass in VCs, Singapore, China, all these places, they're looking Indian market, especially after this 2% GDP, which was declared by Moody rating agency. Everybody is, excited about Indian economy, because all other economies have negative growth rate which is projected. So except China and India. So you guys have a fair chance to sell India story. Don't worry about the revenues now. Just everybody who is in the world, in the venture world, they understand that this is next 6 months in terms of revenue is okay, because it is not a mistake of the startup. It is just, the market is going to be like that. But yes, there will be some sectors which will not be impacted and which will rather have a growth. Like you see, PSAFE is here. They will talk about their story of how they're getting the gains of this situation. There'll be healthcare products companies which will be benefiting from this situation. There will be education product company will be benefiting from this situation. Gaming company will be benefiting from this situation. So this is a time for some of the sectors to actually go up in terms of their revenues. But there are, sectors, and people understand this. There's no issue on that. So that's what I can say.
Yeah. So doctor, we'll just take a pause here for a minute. I'm going to come back and question you on the China VC strategy. But right now we have Vikas from TiE who has joined us. So Vikas, welcome.
Thank you. Thank you, Naveen.
So Vikas, I think all the entrepreneurs on the call here want to understand what have you guys been doing? How come your revenues are going up? What is it that you're doing different? What is your strategy doing? So just give us a quick overview on that. That would be helpful.
Unfortunately, I'm in the category where the term personal hygiene has become the flavor. Everyone is talking about personal hygiene. We have been talking from last 7 years, and of late, unfortunately, thanks to COVID-19, that the personal hygiene has taken off. And we always believed that personal hygiene has to be important. Our revenues are going up because we were sitting on a lot of stocks. As soon as China, the first case in China happened, the Wuhan got locked down. We started getting our product in place. Our orders were in place, and as soon as the 2nd of March, when the first case in Delhi and Telangana hit, in less than 36 hours, we received 40,000 orders. And I think the execution, the category which we are in, able to help us to scale where we are right now. We haven't stopped our operation for a single minute. We have been working throughout the lockdown period, and we have been shipping across pan India. Of course, there was a challenge in a couple of days, but we are now for offline sales, of course, and online we have already started Delhi and NCR, Delhi and Gurgaon. We are not shipping across India for offline, for online. Yeah.
And how have you been able to do this? I mean, are you doing this all from working from home? How have you changed your supply chain? What's happened? What have you done differently now?
So I think there's no differently. It's just that the team is motivated. We had stocks with us. We had a permission from all the government establishment that the mask, the sanitizers, the hand sanitizers, the sanitary napkins, So what are the products we were dealing in for so many years? So all our corporate employees are working from home. They are supporting us from the background. What we have done is, being a hygiene company, we know what sanitization is all about. So we are maintaining the social distance. We are calling only 20% of our workforce at any given point of time. We are rotating people alternatively. The managers of the warehouse, they are going alternatively for a couple of hours. We have taken all the permission in terms of logistics, the supply chain, and that is how we are able to execute our orders.
Excellent. And what do you see in terms of your sales now during this time? Is it increasing?
Oh, so of course, Dr. Apoorva knows about it. I don't want to figure out that figure for anyone, but yes, if you see, both he and I am smiling. Unfortunately, people realize the importance of personal hygiene now. It will grow, as I've been telling to a lot of people, that personal hygiene before COVID were at on a scale of 0 to 10, were at 1 in December. At this moment, it is 10 on 10. Give 1 year, it will come and lie at around 7. So it means 7x increase in the overall category. And we see many people, opportunists, they are coming at this point of time because, and it's good only, their capacity is idle, their people are idle, and if they are helping the nation by coming out in this category is welcome. But will they able to survive? No. They will only able to fulfill the demand which is there, which we are unable to meet, and it's good, right? But they have to go back to their core business for which they have started the venture.
Excellent. And another interesting question which a lot of entrepreneurs will want to know is, what are you thinking about your fundraising strategy now?
So, on 3rd of March, Dr. Apoorva and we had a call, and I said, and he told me, Vikas, you have your Paytm moment, right? Just like on the 9th of November 2016, when what happened with Paytm and demonetization. So we have a lot of inbound inquiries, not now, but after we raised our Series A in October, because we were growing, very rapidly in terms of personal hygiene. So the strategy will be, if I would not have been into PSAFE, if I were another entrepreneur, if I was talking to any of the VCs, if my term sheet was about to sign, or my due diligence is about to happen, I'll go back to them and I say, you know what, you believed in me, we have come so far, let's close it now. I know my projection will be different, my business model will be different, but you believe in the team, you believe in the product, let's discount some valuation. I think an entrepreneur, and this is very important for every entrepreneur, let's discount it. A bit of your valuation, not bit, I'll say around 20-25% if you really want cash, otherwise you'll fall off. Go back to your employees who are sitting at a very high salaries, increase your ESOPs to them, right? And I think that's the best policy to take it forward.
Excellent answer. A lot of people so far have been hesitating to talk and give out numbers, and I think you're the first person, Vikas, that was ever come out with a number saying 20-25% is a good number, which is actually very courageous. Now, Vikas, I'll just park you for a minute. I'm going to bring back Apoorva here and then go into a conversation. So Dr. Apoorva, you started on an interesting note by telling us, or telling all the entrepreneurs, look at China as a possible place to pick up your fundraising at the moment. So what are your strategies to approach Chinese investors?
See, I'll tell you, why is that China? And that reason is, first of all, they are the one who's now stable most, number one. Second, the size of VC market in China is way beyond than any other market in the world, right? And third, if you have any credible partners there in China, some of our companies are funded by Alibaba and all. So Alibaba-based affiliated funds and all. So if you have a credible Chinese partner there who can help you raise the larger round, it's very easy. You need to have a local Chinese VC, bank, investment bank to handle it. Nobody from India can do it, 100%. Nobody can India from do it. Very few.
Yeah,
right?
so my question is, what is this? How do you approach Chinese investors? क्या करना
So
पड़ेगा?
we've spent actually around 2 years, frankly, reaching out to them for our portfolios. We are not a banker, but we did for our portfolio, largely for connecting them at least. We went there, and finally we got in touch with Alibaba team. So they opened the doors to us, and they connected us to some of the right people there. Because in China also there is they have this reference system. Who is bringing the deal to them? Because if it is a guy who's credible and he is known in the market, then they see it seriously. Otherwise, they don't see it. And you can't be a banker there. Their reference system works very well. So first of all, we visited them at least 6-8 times. My team visited them so many times. And then we got in touch. So we have a team actually who is helping our portfolio companies in a day and night manner for reaching out to the right set of investors. And now we know most of the top VCs there, and most of the tier 2, tier 3 level VCs there, a lot of them. Yes, but there are some I will say they are open, and a lot of them have now their representative in India, right? So those who have an India strategy in place. A lot of them did not had earlier the India strategy, but now most of them have. So it's not a difficult thing now to do.
Yeah. So Vikas, bringing you in back, have you tried approaching the Chinese investors?
As I told you that after our Series A, which happened in October, and from January onwards, we have around, I think around 5 inbounds. So we haven't gone out actually. And now since I call this COVID, unfortunately, our Paytm moment, so we are waiting for people to reach out to us, and they are doing that. So no, we haven't gone out to the Chinese. But yes, Dr. Apoorva and I discussed. I think there's a huge opportunity for Chinese VCs, Series B type of VC to come and invest in our company.
How do you see pitching to Chinese investors different from India?
I think it's very different. Chinese investors, though I haven't had much of experience with them, but whatever I learned and whatever I from the academic source, I can see that they're more towards growth. They're more towards global. They're more towards I think scale. I think that's what 3 things which they look for. EBITDA is I don't think that they look into EBITDA. But I think the things have changed. The world has changed, and going forward in July, there will be a lot of different parameters which people will be looking
at. And Dr. Apoorva, bringing you back in, there are a few questions which some of our entrepreneurs have been asking. One is, what do you see the future for online apparel industry? Do you think these entrepreneurs can approach investors right now and build this thing now?
Online apparel industry.
Yeah.
Right. So see, as I said, Naveen, every consumer business sales will be impacted, right? So this is a time they know that their sales are impacted. So best time for them to reach out to investor with the past sale data and the projected sale data, right? Because otherwise, what is next 3 months if a startup has to evaluate what they would have done in the time of COVID, and everybody knows the revenues will be impacted, what they would have done for themselves. I think the best thing what they can do is to reach out to the investors for the larger round.
Got it.
And they can always show the projected revenues, and they can always show what is the current potential or past track record, right? Because every VC understand this. The startup should not allow this 3 months to come as a gap in their startup life cycle. That's the only way, right? So I'll say straight away, they should go for it. And these days, that funding has become stage agnostic. These days, the funding has become sector agnostic. the funding has become, you will see a lot of companies in India, they got funded, and the revenues usually funded. So that those things have gone. So startups, VC investors, they look at the potential of the deal, they look at the team, they also understand that what is the current investment scenario. And they're also they're also hungry at this time for the right startup to come to them.
Okay. Thank you, Dr. Apoorva. So Vikas, I think from what I know, you have a time restriction and a limit. So we'll let you off the hook today, but we'll definitely catch you next week for another discussion on something else. So
thank you.
Thanks a lot for coming in.
Thanks for having me. Thank you, guys.
Thanks a lot, Vikas. So
Now,
Dr. Apoorva, we have your next portfolio company, Sapan. So could you give them a quick introduction? And Sapan, are you there?
Yeah, I'm there.
Yes, Sapan, I think you'll need to increase your volume. We can't hear you clearly.
Can you all hear me now?
Yeah, that's much better. So, Sapan, welcome. A quick introduction about yourself, your organization, and how are these times testing you right now?
Great. So thank you, Naveen and Dr. Apoorva, for having me at this event. I hope you all can hear me.
Yeah, we can hear you.
Yeah, we can hear you.
Hi. So we founded Easy Rewards in 2012. It's been 8 years since when we founded the company. And we are primarily a B2B SaaS-based CRM company. So there has been an impact. In fact, unlike Vikas, where there has been an extreme growth, we do see an impact because we deal with 4 main non-essential category. That's the luxury spending in retail. Then we have the hospitality. Then we have the healthcare. And then we have the food and beverage. So out of that, 2 categories are impacted the huge. That is hospitality and retail. So in the last 8 years, we've seen this a couple of times, but this impact has been huge, where there is in fact zero sales at most of the places in retail. But we have 2 essential category retailers like Godrej Nature Basket run CRM for us, and they have done the entire sales for the year in that couple of months, which 15 odd days which passed by. Then we also do CRM for SRL healthcare diagnostic. So that has also been doing great. But overall, there has been a revenue dip. We are targeting a quarter, April, May, June, as Dr. Apoorva rightly said, which will be a kind of zero revenue period. We are trying to maximize this 3 months where we could do some kind of revenue billing to these guys, because most of them stores are operational at mall level and there are no stores operational post 15th of March. So there has been an impact at them. They are also trying to negotiate with the mall owners and the landlords, etc. So there is a continuous negotiation which is going on, and let's see how we come up with this situation. So that's how we are planning this 3 months. From the work perspective, in at our office, we are doing work from home completely, and we are trying to engage with all employees evening times. So we've started a concept known as Sham Ki Chai, wherein each founder is talking to a group of people and trying to address if they have any issues. So that kind of conversations we are having right now.
Okay.
Any specific questions you would like to answer?
No, the question is, how do you see your sales go for the next 3-4 months, and then what do you expect post that?
So there are 2 things. One is April, May, June, as I said, we definitely see a dip by 25 to 30% at least. That can go as high as 50%. But post that, what I've been reading, even in Wuhan, the consumer sector has immediately picked up. The first few sectors to pick up is the consumer sector. So though we see a dip immediately for April, May, June, the moment it starts and after a month, you would see that the sentiments would be positive. And then we see, if you see region wise, there will be Bengal celebrating their festivals. Diwali would be coming around. So we would see a pickup, but not as much as what it was a few months back. But definitely there is hope and optimism all around.
So I have a 2-part question now. Have you been tempted to pivot your business, or have you been more tempted to pivot your pricing and revenue models?
Not really, not tempted to pivot. We are focusing on the same. So for we were a little lucky that we got funded in November 2019. So, and this year we weren't looking for funds. So that has been a little good part of our fundraise strategy. And look at some, in fact, there was a lot of things which were pending in the pipeline since so many years, which we never picked up, planning to close all these open things. trying to engage more with the retailers, with the clients, and trying to get more clarity what next. So no change in the business plan as such, but definitely re-looking at the revenue numbers for sure.
Okay, and the other interesting thing that I think a lot of entrepreneurs will want to know is, okay, you've been funded in November, but are you thinking of wage cuts, and how are you managing costs to suppliers and value chain folks?
Absolutely. So the first thing I mentioned, there is a continuous negotiation which is started from April 1st, starting from the rent owners at all the places, premises which we have. Similarly, taking more time to pay the vendors, discussion with them, where essential and non-essentials. We have broken down the marketing revenue as well, and re-looking at each cost.
Okay.
It's a matter of the cost coming in versus the cost going out. So there has been slowdown in the payments post March 15th. A lot of premises haven't paid post March 15th, and the moment things open up, clarity will be seek. So that's where everyone is right now. Everyone is waiting so that stores open up and back to business.
No, I'm asking, what about your employees? How are you managing salaries now?
Right now, since we've already cleared the March, April also, for now, we are not thinking of massive layoffs or any kind of cost cutting. But as I said, every 15 days is a quarter for us. So the more the delay in opening would mean that we need to rethink of a strategy every 15 days. So the moment clarity we seek, we then relook at every cost at the employee end as well.
How big is your organization?
Right now, we are 200 employees.
And spread across the country.
Spread across.
That is interesting. So basically, you will have a very deferred kind of a strategy with respect to where things are going to open up first and how you're going to work.
True.
And I'm assuming that your software sits in the cloud, so that's
Absolutely.
the part of it. So
that's the benefit.
And so Sapan, the next question is
when you said cloud, interesting point is we've stopped a lot of servers as well, and even wrote to Azure to seek for more credits and a credible line in that sense also. So as I said, you need to be ruthless, negotiate at every end, get lucky wherever you can. That can be one interesting opportunity.
And what has been the response from Azure?
Till now, they haven't reverted. In fact, a few of them are chasing for the payments as well. So but you need to keep following up.
Okay. And the sales guy will keep following with you then.
Absolutely.
Okay. The next thing is how much of product innovation have you taken up now? Right. Are you looking at building out various products in this time? Are you thinking of completing stuff? Are you thinking of starting a new version? What are you doing at this downtime?
So, yeah, interesting point. There were 3 points which I said. One was there was a stack which was ready to be shipped in this month, which got delayed for a lot of time due to this, other operations. That we are planning to launch immediately in when the stores open up. That's the feedback system which we are planning. There is another thing which we were planning is revamp our own website, which taken us ages right now. So right now we operate out of allaboutrewards.com, though our company name is Easy Rewards. So we will bring Easy Rewards as the main site. So there are 3 projects we are planning to go live in by May 15th. So this is the time which we will make most out of these 3 projects. So as I said, we are trying to make most of this time, wherein the load at the operation end is very less because most of the stores aren't operational. Okay. So trying to do learning and development at the operational level also. And that's how we are navigating this. And there is no new innovation which we are planning for now in this particular month as such.
Okay. Thanks, Sapan.
I think COVID specific would that be the point.
Okay. And Sapan, one last question that I have for you right now is, what are you doing to keep all the morale up, not only just of the employees, but even of yourself?
Right.
You go through lulls during the day and worry. How are you as an entrepreneur trying to cope up as an individual, as a family member?
Absolutely. So there are 3 things. For me, I started off my career from entrepreneurship in school, college itself. So I was passed out of MICA from 2009. So the first venture I started is in college. And I have seen personally tougher times than this in the entrepreneurship journey as well. But this is an unprecedented event. But I always have one mantra, this too shall pass, nothing is permanent. Definitely we see an optimism post this, and there is something good to be there post the 3 months period which I foresee right now. So that's how we can take it up, take it easy and stay safe.
Thank you, Sapan. So for all the first-time entrepreneurs out there who have joined us today, I think Sapan's summary was excellent. You know, you might have come into or you might have become an entrepreneur for the first time and right away must have jumped into this. But don't worry, it's on an average every 4 times an entrepreneur fails and his 5th venture hits. So as a serial entrepreneur, they're much more used to this. But nobody's kind of seen this kind of level of uncertainty. But
Right.
the guys hanging over there. In fact, look at it this way: the first-time entrepreneurs, you guys are being tested by fire the very first time. So you're going to come out of it much more stronger than even some of the serial entrepreneurs over their entire journey. So that's the thing. So thanks, Apan. I'm going back to Dr. Apoorva now. Dr. Apoorva.
Yeah.
In the meantime, let me ask you a couple of questions. The first question I think Dr. Apoorva is everybody is asking is, what kind of sectors would you be now investing in? What are the sectors that you invest in?
So I think next 2 years, this is a sunrise time for the biotech, healthcare product companies.
Okay.
This is the best time. Because what happened, everybody in the world, they were investing in US. Yes, there is a huge, and that the maximum investment happens in healthcare and biotech and product companies. As India, China में भी होता है, but India में उतना कभी focus नहीं. There was never a focus like that. For us, now we have first time realized that healthcare is important. People realized. So there will be a lot of investment going to happen in that. So that's why we launched a healthcare specific CXO network. And we also launched, we've decided to do at least 15 investment this year into healthcare and biotech sector. And now we are looking generic companies. We are not just looking at tech-enabled healthcare product company. No, that's never our strategy. We have companies like Measure, who are a proper machine, which is now installed in, they're into sterilization machine, sterilization of medical waste. We have so similar product companies. So we like Impact Guru is another company of ours. But they are deep rooted, and so you will see emergence of a lot of good companies in this sector. Number one. Number two, the which is also deep tech companies. I think we had experimentation last. We done 7, and 4 of them doing amazing, right now, and we get a very good multiplier there. One of them V-Phrase, one of them this Orbo, then InStory. So we realized that this will be, because this is a time, next 3-4 months, I know they don't have to worry about the revenue, but they just have to focus on building the technology. It's a deep technology company. I'll be doing maybe 7-8 investments in that again this year. And another sector I'm looking at is gaming, right? There are not many great companies in India in terms of gaming. Yeah, hardly any India. Yeah, there are this Dream 11 of the world. Yes, there are. Our investment is is doing also well. They got funded by large players. But probably this year we'll be doing at least 5 investments in the gaming companies, and I'm looking really solid product companies out there, gaming product companies, right? So these are 3 in my radar at next 3 to 5 months, right? But yes, we are, as soon, because we are sector agnostic, we are, if anything comes to us which is exceptional in all other sectors, we'll be definitely looking at it, right? So today, if you see a lot of B2B startups reaching out to us, so that's happening. But anything other than that is also open. But it's like these are 3 for sure. I'm looking for the next 3 months time.
So we've also got an interesting question about what do you see happening in the edtech space and also in the organic grocery and daily essential space. Are people
See,
trying
in the ad tech space, especially media, some really good companies
Sorry.
are coming. Like we invested in Play to Me. That is a company now funded by SOSV, by us and Singapore government. So that is they are doing really well because suddenly their revenues have gone up. Clickstream revenue gone up, and people are very happy. Investors are very happy with their performance. So this media entertainment, and recently this Catch Up. This is a comedy show in multiple language. Suddenly I was looking at data. Their numbers have grown significantly high. So media companies also good time actually come, and the chances are for their success. I mean, we have around 6 or 7. I don't remember exact number. 7, I believe, right, in the media investments. So we also definitely looking media companies. I forgot to say that because in next 2 years they have a good time coming. So
No, sorry, Apoorva, the question was edtech, educational tech.
Oh, sorry. I thought ad tech.
My bad.
So education tech, yes. That's why I said, education is also a sector I'm looking at. Did I forget to mention that? I'm sure, but yeah, education. We just invested in Q-in-1, which is another company now. Recently, we invested in. There are ad tech companies which actually, have good time. We invested in Pariksha Labs recently. Announcement is going out in the market with Instant Engine. So we are definitely investing in, because there is a lot of new type of product coming there. And we realized that this is the right time for them also. So, so I think this is another sector we are definitely looking at.
Okay. So I think Dr.
And not just tech, not just ad tech, even any education product companies. There are even offline education product companies. We are looking for that.
Okay. And Dr. Apoorva, one sector that others were also asking was on the online grocery, fresh, organic products.
So actually that sector now is suddenly picked up. Because this of virtualization which has happened in your life, all of us are using now these grocery companies. But there was always a challenge because of the margin issues there. I'm not sure if I will be doing that, but yeah, I'm looking some grocery companies which are serving the rural markets, and they are coming with this interesting supply chain there. So I'm looking for those kind of models now. So there are a few of companies we are evaluating for that purpose, because in tier 1 market size is too small actually, and that does not give them enough to earn the profitability, right? So those companies who are targeting large number of cities, like it is 50, 60, 70, 80 cities, it is 100 cities, especially they have expertise there. The margins also high there, right? So I'm looking for that supply chain companies and that kind of grocery companies who are targeting those markets, right?
Okay. So Dr. Apoorva, I think before, right now, I think Kumar has come from Supply Note. Before we
Okay.
guys, I see a lot of people asking from various sectors. So let me come back to those sectors. Post Kumar from Supply Note. Just to make an announcement over here, please everybody know that venture capitalists and TiE Mumbai are partners, and we are doing our pitch to investors or our pitch day on 1st of May. So all of you can please start sending us your pitch decks. We will definitely shortlist a few and we will do Zoom pitches. Note the date, it's 1st May. We will send you all the details. So we'll have a bunch of early stage investors from VCATs and from TiE Mumbai chat members. And whatever Dr. Apoorva just said, all these sectors will be the hot and bubbling ones that they would like to look at. My colleagues will be pinging on the chat and emailing you all separately details of this. So Kumar, are you there?
Yeah, hi Nabi.
Hello.
Yeah, hi, can you hear me?
Yeah, we can hear you. Are you on the video? I'm not able to see you.
Yes, give me a second. Okay. I think you can see me now.
Yeah. Is that you, Kumar?
Yes, correct.
Welcome.
Hi, everyone.
How are you?
I am pretty well. How are you?
Good, good. Thanks. So, Kumar, a lot of fellow entrepreneurs around the forum, they basically want to ask you a few quick things. What are you doing? What are you in? First of all, give us a quick description of your company. What are you doing? And how are you combating the current situation? And are you seeing your revenues go up or down? And what's your advice to entrepreneurs?
So, just a quick overview of what we do. So, Supply Note is a cloud-based purchase and supply chain solution for the Horeca category. We are a SaaS plus marketplace model uh, where we first digitize how restaurant has been procuring at the backend, and then we help them eradicate their inefficiencies in the supply chain by suggesting them better sellers, optimization in processes like logistics and warehousing. So that's what we do. Eventually, we bring in about an efficiency of at least 8% in their bottom line, which is about 70% increase in their profit margins, and save as much as 600 hours annually per outlet in operations. Right. So that's what we do. We are currently working in about 29 cities in India, and we are just launching. We have been launching outside India recently in the Middle East region, especially Dubai and Southeast Asia market as well. So that's a brief about Supply Note. Uh, to your second question, I mean, how have been things? So definitely, I mean, our industry is something which has been impacted very much, right? I mean, if you look at the numbers overall, even in delivery companies like Swiggy and Zomato, the numbers have fallen by at least 40-45%. So overall sentiment of eating from out has went down. But if you look at the overall number on the restaurant industry, the situation is more bad because there is no I mean, like going out, right? So that's the current scenario. So for us who help restaurants procure their ingredients and other things, yes, business is impacted pretty bad. So what we are doing is that we're looking at a lot of positives which we can right now. First is obviously optimizing the pending list, on the product side, on the processes side. The second thing is that we are looking at more revenue lines from the existing set of customers we have, helping out restaurants in supplies which are open. So we had an approach to give a SaaS solution to most of the restaurants across the country, and we were not focusing pretty much on the supply side. We were thinking that we'll go after that after a time, but currently the need is more primary rather than looking at optimization. So we are the equations have changed. So we are focusing more on supplies. So that is taking care of the lost revenue opportunity from the subscription, which we would ideally enjoy. So that's one. And also to take care of our fixed costs, we have one advantage that since we are a two-way SaaS, so both suppliers and the restaurants are on the platform, and the suppliers which are there can cater to the retail stores as well. So we are using that seller base to help the local kirana stores in various localities in India to get their supplies. So we are using our existing infrastructure to capture that demand. So we have partnered with multiple companies who already have that acquisition. So for example, we have recently done a partnership with a company called OK Credit, which is a ledger management application. Similar company is Khata Book. So that is going to give us exposure to about 30,000 retail store in Delhi NCR. So these kind of channels we have explored. We have went back to do a lot of partnerships so that we can have quicker acquisitions. I mean, while we are on ground during normal days, we are mostly focusing on our team and our capabilities. But now we are relying more on collaborative efforts. So that is again one positive which has come in our DNA during this period. Yeah.
Great, Kumar. How much of revenue hits have you taken in these few months now?
So we are doing, I think Sapan pointed out that 15 days is a quarter, right? So for us, 7 days is a month now. I mean, actually slightly lesser than that. So we are monitoring it week on week. So the first lockdown week was a disaster. It was revenues down by about 80%, right? But then onwards, I mean, most of the reason was that in that month, vehicles didn't move at all, right? So we didn't had the passes. The restaurant people didn't had any passes to open up with their chefs also. So as soon as we got the passes, we had some movement going on. We were able to again capture. So what I'm seeing is that week on week things are improving, because as businesses and especially in supply chain, we are getting to know how to operate, right? So that is very, very important. Even our restaurants know what to do and what not to do, right? Before, in the first couple of weeks, it was a lot of fuss. I mean, that nobody knew what we can do and what we cannot do and what we should not do, right? So now that clarity has come up. So gradually, definitely the growth wouldn't be there, but we are moving towards what optimal things could be done inside this situation. So yeah, so from week 1 to week 4, huge improvement. I mean, numbers have improved by at least 40 to 50%. But yeah, I mean, like it's still down by 40-50% from normal days.
How big are you as an organization, Kumar?
So we are a 52-member team stationed out of Delhi NCR. We have a couple of offices in Delhi NCR.
And when did you do your last fundraise?
So we did our last fundraise in 2019. That's somewhere in the mid, in July 2019, we closed our funding. And most recently, we were involved in a fundraise process. So we are one company whose fundraise got impacted by COVID. But yes, but we have some partial closures going on even in the current situation.
So what was the experience that you have had with investors when you went to raise now?
So I think so. Just before the COVID scenario hit India, I was in Taipei with MOX in February actually, and then I was in Singapore for a couple of days, and then I came back to India. Situation got very bad. So outside India, the situation is taken very positively. I mean, maybe they are not very serious about how things are, and they thought they will cope up with it. But such was the situation there. They were looking at it a temporary thing. Even in India, I feel, as Dr. Apoorva also said, that it's a temporary thing, right? I mean, like up to June, there could be not a great growth opportunity maybe, but after June, things would be like that. I mean, so has been the perspective of most of the investors also who I have spoken with. So even when they are looking at our numbers, our cohorts, they are not employing futures from the numbers in March and April, right? I mean, everybody is sane enough. So not very heavy discounting going on valuations, but yes, I mean the overall thing is that the multipliers has to change, because you cannot expect the same growth, right? So even entrepreneurs should kind of take that into account, that what to ask for, and how much money one should raise. Maybe this is not the best time to raise a big round and dilute a lot of equity. Maybe raising low and making your operations stronger unit economics wise is a better way to approach during this period of uncertainty. So yeah, I mean, like that's my 2 cents on that.
Okay, thanks, Kumar. Hey, all the entrepreneurs, if you have kind of noted a slight little deviation from what Kumar and Dr. Apoorva have been saying. Dr. Apoorva has been, talking like an investor, saying, "Go rock the world. Investors will invest in you." And I think Kumar gave you guys a very nice subtle hint, saying that don't dilute too much at heavy discounts. So I think, guys, be judicious. Dr. Apoorva, being an investor, will say his side of the story. Kumar, I think, is also giving you his side of the story. Depending on your sector, what kind of an organization you are, and how much fundraise you want to do. I think the good thing about the panelists today is that you're getting both sides of the story. And Kumar, thanks a lot for joining us and giving us your insights. I've been
Yes.
asking this question to all the entrepreneurs. What have you been doing? One, for your own morale, and two, because see, an entrepreneur's journey is a very lonely journey, and you and I think an entrepreneur goes through very dark times in his own mind. So Sapan had an interesting thought because Sapan is a serial entrepreneur, so he's like, "Kuch nahi yaar, ye to, this is just a run of the mill thing. I've seen worse days." What about you?
Yeah, so I mean, like, so this is my, I'm a first time entrepreneur. I started this business back in 2015, straight out of graduation from IIT Kanpur, along with my co founders. So, the good thing is that I've never been lonely, right? So, my co founders have been there from day one. We are four of us, and we are very good friends.
All
We
were
are, sorry?
all of you were batchmates and roommates.
Yeah, three of us have been batchmates.
Excellent.
So we actually enjoy our time together. So yeah, I mean, last year we started living separately, right? So right now, actually, I am lonely, alone, without family. You know, just living on my own. So that's the situation. But again, that brought me back to a lot of my hobbies, which I used to do. First of all, my work has actually increased.
Very good.
I mean, see, this work from home is actually a better way to work, I think, uh, because I am able to work for almost 10 to 12 hours a day, I mean, without stop, right? Uh, that has been the case because your calendar is always blocked, right? So you have to be there. So your efficiency actually increases as a management guy. Otherwise, you're traveling and you are going places, you're wasting a lot of time actually. So that efficiency has increased, but still you have time. You have more 6, 8 more hours with you. So in that time, I kind of utilize it for my hobbies. I used to kind of sketch, and I've been focusing on my fitness. I've been helping my brother figure out features in his app. He runs a yoga meditation app called Urban Yogi. So I mean, I'm doing those kind of stuff, and also spending some family time, giving them at least half an hour on over a phone call. So I mean, like for me, days pass like anything. I mean, I'm enjoying this period actually.
Bartan manjra?
Sorry, yeah. I've learned cooking. I've added that to my skill set.
Okay, excellent. So thanks, Kumar. Thanks, Sapan, for joining us. I'm going to go back to Dr. Apoorva and ask many other questions. And Kumar and Sapan, I think you both has given you really, what to say, very human insights into what needs to be done rather than, manicured, pedicured answers, which nobody likes it in TiE. We're all entrepreneurs. We need straight up, real badass answers. So Dr. Apoorva, back to you now. We'll start with the questionings with some of the entrepreneurs who have asked a few things. Let me go back. I think where we stopped was on EdTech. And the next question, I think Dr. Apoorva was on, not sure if, well, you've answered this question partially. Somebody has asked, what do you see in terms of sports tech, not esports, but sports tech as an investment?
So I think Router was our investment. I mean, and they've just closed one round.
Okay.
Their investment was not impacted because of the situation also. They were on DD stage,
Okay.
right? So I'll say that's a sector where you see good growth coming, although sports are down. I mean, no sports events happening, right? But the engagement in terms of virtual sports are going to grow, right? So that's why I said, sports tech have a future. That is something where a lot of good startup going to come this next 1 or 2 years. That is a part of the gaming. I will say I'll take it more as a esports is also another interesting area where we have 1 or 2 investments, and that is growing in terms of numbers, right? So I'll say sports tech, yes, this is time for that.
And the most important sector, which we all like, Dr. Apoorva, what is your thought on fintech startups now?
So the insurance is odd, and we just invested in Insurance Samadhan, which is a company into conflicts management of insurance settlements. So insurance is a couple of new products also come to us related to insurance and other fintech product distribution. The problem is right now is although you see a lot of ad of Policy Bazaar in the TV these days, so these days, yes, there'll be companies like, who can also finance the startups. They will be growing. There'll be like, there are companies like Club and, Get Vantage in our portfolio. Those who are financing the marketing spends of the startups. Those kind of companies will come. This is a new genre of, fintech startups. Because today everybody wants to reduce the burns, right? So what is a fintech solution for that? Something like that is so now there may be some new type of products may come, and we are very much open for that.
And again, a few obvious
So
questions.
in last 1 quarter, we have done three or four fintech.
What are your thoughts on renewable energy as a sector now?
So renewable energy, actually, to be frank, very capital intensive in terms of when it comes to the core renewable energy sector. But there are a lot of tech associated. The startups which are associated, like we got a robotics company which clean the solar panel. Interesting. Especially clean check, you're seeing that the application of the technology. So that is going to grow. I'm not very bullish on the core clean tech investments because anything which requires very heavy capital investments at the moment cannot fly.
Yeah, maybe
for next 6 months.
I also think, Dr. Apoorva, this is a question more for mid-range investors, and I think this is more a question for mid-range investors and VCs and private equities who are looking at those kind of capital.
Okay. So even there, you have to see that I'm not a VC, frankly, but for VC largely from the early stage point of view, right? As far as those companies are concerned, yes, like for example, companies. The problem is that the transportation is down. So a lot of companies catering clean tech fuel and clean tech, they're down because of that. So everything is interlinked, right?
So
even clean tech companies are replacing the existing companies, their business. But that is also impacted. No? Travels, transportation, everything is impacted.
Yep, I totally agree. The next question, Dr. Apoorva, is I think a very interesting one. Somebody is asking a question on how do you see the food industry, the health food and nutraceutical industries doing after this, and what is your investment strategy for that?
The food industry, yes, that's if you see in last 5 or 10 years also in India, they've been off and on, right? Sometimes they're hot, sometimes they're out of the market. But it keeps happening. The demand for food startups depends upon what the product they're bringing and how much they're scalable, right? Although the time right now, is like a lot of people are getting time for, but they are like social distancing is going to be continued at least for 3 to 6 months time, right? People are careful on what they're eating, right? There will be good time for companies like, who can deliver food at home, but not sure the people will start immediately going to outlets and all, because social distancing is something which is going to impact it. So I would say 6 months, 5 to 6 months, you will have to be careful.
But don't you also think, Dr. Purva, this is the right time for convenient foods, packaged foods to make a resurgence in the country?
So the packaged food, I would say the segment, frankly, the people at home, right? They are cooking, they're making fresh food by themselves, right? So not sure about how much it will pick up, because there was packaged foods with demand come again linked to the travels a lot,
True.
and people are traveling, right?
Mm.
So people are rather like adding the skill of cooking, like Kumar was telling. So I'm not sure about that, to be frank on that side.
Okay. There's an interesting question again, Dr. Purva. What do you think is the impact on valuation because of public markets going down right now?
There will be impact on the valuation for sure, right? At least 20% to 25%. And startup has to understand that. And so it is important in order to control the dilution, they have to plan their spending also accordingly. So, but there will be a valuation.
And are you seeing LPs of yours moving to public markets because of this?
See, the LPs in the funds are mostly, the very, very, I would say, the strong business background people. They definitely see opportunity when the markets are down to invest, right? Because in years' time or 6 months to 9 month time, when the market comes back, you know, it's going to give them best returns. You see, you would have heard that Mr. Damani, R.K. Damani, is the biggest gainer in this market. So there are a lot of strong business background people. They eye for this opportunity, for sure.
Okay. Well, there's a question on your view on B2B e-commerce.
B2B e-commerce.
Something like what Kumar is doing.
Yeah. So yeah, Kumar is an example for that.
Mm-hmm.
So they are impacted. Their revenues are impacted. And
but
so they're
come back again strongly.
See, but I want to tell you something, that a lot of predictions were there that it will take 7 quarters, it will take 9 quarters to revamp the economy. And I want to tell you the learnings in the past in Indian and Chinese market. We bounce back faster than many other expectations.
True, very true.
Right. So as soon as this lockdown is over, you will see because these are economies where people are hungry of creating success. They're hungry of delivering the this thing. So we bounce back faster than other economies and beyond expectations.
What happens to the sharing economy of furnitures and hospital supplies and stuff like that?
This is something which is, and you know that social distancing it will be in the mind of people for about, I will say about at least 6 months.
Okay.
So they will be impacted for at least 6 months because of that. But yeah, I mean, sharing economy includes a lot of other things, not just direct sharing of the apartments or direct sharing of the vehicle or something. I think there will be many other products. Depends from product to product also. But yes, this social distancing will play a role there for sure.
So I'm just going to take a pause from the questions that are coming up and ask you something which Bill Gates quoted, saying that he now sees this pandemic to be recurring quite frequently because they reach the mass of human population. So what are your thoughts on that in terms of business strategy for startups? And are you definitely going to ask your startups to start including a business planning business backup kind of a blessing.
See, I've been always telling the startups to raise enough capital when they are raising,
Okay.
right? At least for 18 months to 24 months, right? That's the reason why you would have seen the other startups, my portfolios. They have raised at least money for 18 months, right? So when this kind of pandemic, and Bill Gates is completely right. I mean, he was the one who first predicted in 2005 there will be pandemic coming. He's completely right that this will be more frequent now because once these kind of things start happening every 10 years, 20 years, these kind of things are possible to come back. So the startup should have, if their earlier their strategy was to raise money for 1 year or 18 months, now they should raise money for 24 months, because keeping this in mind that this can occur in every 5 years or 10 years. Although the startup life cycle is also just 5 to 10 years from that perspective. But still, I'll say, you never know when it comes back. So you have to have some provisioning. Although it is difficult to justify when it comes to raise the capital. It is very difficult to justify to a VC fund why you are raising this much. But I've been always advocating this to my startups that raise enough capital, right? So the same advice to them even in the future also.
Thank you. And Dr. Apoorva, what's your take on retail shops, retail shops, real estate attached to that?
That is all seriously impacted because everything is shut down now, lockdown. So they have to wait. And I think they should negotiate with the real estate associated. And because this is a time when everybody understands how their businesses are impacted.
Okay.
So they should definitely negotiate with from the properties associated, and otherwise they may be seriously be in trouble.
And what if you own the property? What if you own the property? What if you're the owner of a retail couple of stores?
So frankly, I mean, these days a lot of people are investing in PM Care Fund, right? So better way for, if you ask me what you're going to give, what you're doing, what you're donating. So I will be rather helping a startup, right? Because for us, the best way to build this nation is helping startup. The best way to bring the economy back to the track is the startup. So if I would be an owner, rather than I will be donating, to the PM Care Fund, I'll be giving it to my startups in this form. So I'll be very happy, to be frank.
Excellent answer. Excellent answer, Dr. Apoorva. So I've got
only startups can bring this economy back. This also, please understand. Now it says this is the only solution left. With all other businesses will take time to come back. Only startups can grow fast and bring back this economy faster than back to the normal.
So Dr. Apoorva, last closing thoughts. What do you have? What is your advice to all the entrepreneurs?
I think guys see this, and this is, I am frankly, I'm telling myself also, and my startups also, and my investors also, see this as an opportunity to become a startup economy like China, right? Because this is a time when you can create something, because you are at home, you are in meditation mode, you are you are closest to yourself now. This is a time when you can disrupt. This is a time when you can actually think of something which eureka moment of your life, right? And that will transform this economy. We just need 200 startup unicorns in this country, right? So even if 200 people come with eureka startup, eureka movement scene, I can bet, the future is going to be very, very bright for India. So this is a time when the startups should actually think through. And that is my last advice.
Thank you, Dr. Apoorva. I think
Thank you.
a lot of kudos to you from a lot of people.
Right.
Again, folks, I'd like
Thank
to
you.
thank Dr. Apoorva, Sapan, Kumar, and Vikas for joining us. As you know, we're all here through TiE to help each other out. And one great takeaway, I think, is the startup economy can help each other out in these times. Try see if you can become suppliers and aggregators of each other. That itself is a big way to kind of start it off. Next is, I think, we will be doing the pitch session on 1st May with VCATs and the team. So please start sending us your pitch decks. We will kind of do again Zoom sessions, and we'll have a number of investors lined up for that. And again, every day, TiE Mumbai tries to help you a little with all its programs. So this is the lineup that we have. Friday, we have one more investor. We have a webinar with Sanjay Nath. Sanjay is going to be doing a session on how to do sales and marketing during this time and how to get market share during this time. He's very specific on that. We do have a session tomorrow on, again, the operational issues, which is kind of partnered by my CFO. And we have Rajesh Segal from Equanimity Ventures, another early stage investor who's coming to kind of answer your questions for that. And our legal show goes on, Founders 101, every Thursday, same time, 12 to 1. We then, I think, have another. So if you picked up our, flow right now, every Sunday is our retail show. Every Thursday is our legal show. And in between, we have enough of investors and entrepreneurs coming and talking to you guys. Keep writing to us. Keep the morale high. We've got a few more days now in this lockdown mode. Also remember that we're trying to coordinate giving food to a lot of the poor and needy. So a lot of your fellow food and beverage entrepreneurs are, helping us out through their through their space, kitchen, and capacities of stuff. So we'll come back to you with what help we need, because beginning 15th, when the second phase of the lockdown starts, the government has requested more entrepreneurs to kind of help them in distributing food for the poor and needy. So we'll be sending out an email to everybody saying what the plan is, where we can help, and what more capacity we need. And please do help us in capacity. And once again, thank you very much, everyone, and keep your spirits high. We'll all be back soon, and get some of the best innovations out. For all you know, in today's session, we might have been at least speaking to 10 unicorns of the future. So thanks again. See you all. Have a great day. Bye-bye. Thanks, Apan. Thanks, Kumar. Thanks, Dr. Apoorva. Thank you all, the VCATS team, and thank you all, TiE members. See you soon tomorrow. Tomorrow's timing, please note. We'll be back tomorrow. Bye-bye.